Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 21st of September, 2023. Thanks for joining me this morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2541. Lots and lots going on here. We'll start as usual with our convergent trading pre-market summary sheet. The overall sentiment, strong risk off, nothing major on the reporting earnings calendar, but quite a few macro type events in place. Mainly, we had the, it says BOC, but actually it's BOE. Apologize for that. Bank of England left key interest rates unchanged at 5.25 after raising for 14 consecutive sessions. U.S. initial claims this morning came in pretty hot. I think the number was, they came in pretty hot. Let's see. Initial claims came in at 201,000 versus 225,000 expected. So labor market continues to be strong. And Philly Fed came in pretty weak at negative 13.5 versus negative 0.7 expected. And what we have left is Lagarde at 10 Eastern with existing home sales. Other than that, Switzerland, Norway, Sweden all kept their rates unchanged as well. The FOMC yesterday announced that it held rates steady, but the overall outlook was hawkish, pretty hawkish from Jerome Powell. And what the market is reacting to currently, apparently, is the duration of the interest rate levels rather than the ceiling at this point. The duration can do a lot more damage to earnings than the ceiling on its own. You know, if the market, if short-term interest rates go up, and then the economy responds and they go back down, that's kind of a short-lived. Maybe you'll see a hit in your cost of carry for maybe a quarter of earnings. But if they are up modestly but then stay up there for a long time, that can have an impact on investment, borrowing. You know, if you want to build that factory or whatever, your profit margins went way down. Also, for investors in the market, you can get a little over 5% now on what is considered a risk-free investment. So the stock market now has to compete by finding a way to attract money back in and offer something that's much better than 5%, which you can get by just depositing your money in certain paper. So it's overall, this is pretty market negative or equity negative, and we see the reaction here yesterday. The market's betting on another increase on the January 31, 2024. So I want to make sure you're all aware of this tool here. Very important. This is the Fed Fund Futures pricing in what the Fed is going to do next, or what the market's betting the Fed is going to do next. You could see that, you know, November they're looking for the current rates right here. November they're betting on it being steady. In December, you could see that the current rate still, even though this has moved up slightly, it's still betting that the Fed isn't going to change anything. But in January, we see that the probability of a 25 basis point hike, which Jerome Powell talked about yesterday, is increasing. So is the one for 50 basis points. And then from there, you go out on the curve, and you could see that the market later this year starts to price in. See this? You start to see lower interest rates. These are the interest rates right here in basis points, right? We're currently between 5 and 5.25%, or 500 to 525 basis points. And you can see that as you go out on the curve, that lower interest rates start to get a probability. And this is an important tool to kind of look at what the market's expectations are. If you're interested, I'm not an analyst, but I find this stuff fascinating. FedEx yesterday reported, FedEx being a big player in the transports, logistics, the lifeblood of the economy, came in with blowout earnings, $4.55 versus $3.73, but the market couldn't care less given that they're overshadowed by the FOMC. Currently, the S&P is in a trend down environment. Clearly a multi-distribution, but definitely a trend down on very high volume, very meaningful selling coming into today's Sweden raised. I'm just looking at my feed here. I thought I read that it kept the same. Swedish bank. I misread it. They raised from 375 to 4, which was expected. I apologize. That's an error on my part. Sorry about that. The volume's quite high. We are on the edge or past the edge of what we would consider to be normal volume in the S&P at this point of the day. The inventory is 100% short on 43 points, exceeding what we would consider to be normal. The edge of normal for the S&P for the overnight session. So 42, and we have 43.75. So expecting the open to be quite active. Let's dive into, well, yesterday, just real quick, just to go over this. Yesterday, you know, I talked about how this is setting up, and the key kind of brackets were 20 to 80. 20 to 80. We were opening in a 45.06, so about the midpoint of that. And the discussion was, look, if we are responsive, then we're very likely to test the 80, and that's what I'm looking for on the FOMC. If not, it's likely to push to 15 and kind of linger there. The ES and the NQ could not take out the overnight high and just generally stayed in the middle until the FOMC and then broke down later in the session yesterday. So this was on point. Yesterday was, let's look. Okay, here we go. Yesterday we had an engulfing, a bearish engulfing bar here in the S&P. You can see we opened above the prior day, which is a nice little doji. And then we closed at the extreme. This is a very bearish sign of things to come, and we actually breached, I believe we breached the monthly low, last month's low, August low. We ended up taking that out by a few ticks, a handful of ticks as well. Very bearish behavior. We're trading down here currently. This is a daily chart, the composite of the daily chart, and we have moved away from this entire balance. So we were in this balance right here that we've been discussing for a week or so. We have moved away, and you could see that we held the low volume node right in that 45.65 area, and now we've pushed to the low of balance, and we're starting to move away. We're pushing into this next region, but overall, if you look to the right, you'll see in the profile that this area here doesn't have very much going for it. So the expectation is it's likely to struggle to come back, and I'm expecting it to continue to push into the 4,300 handle. Not seeing much in terms of a market that is being supported. Okay, so if we look at the overnight session here and look at the action overall, you could see that the overnight session, the sell-off was very pronounced. We had a multi-distribution trend yesterday. We ended up taking out the 44.80 right here, right on the FOMC announcement. We went to 44.80 and we bounced back up. Really beautiful setup right in that 44.80 area. 44.84. We had a nice collision here with a pullback, nice little setup to push to 4,500. Went back to 44.99 and a half, something like that, right here. Retested, and then it just could not find buyers at all, and it continued all the way through the close without finding buyers, and in the overnight session it couldn't find buyers either. And now we have these collisions at the low as we approach the open, and also approach the 4,400 century figure. So we've moved from 4,500, which had a lot of volume in it, you can see right there, all the way down to the 4,400 figure, and we're separating pretty well from the overnight levels. You can see VWAP and RTA, VWAP and mid in the full session are above us at 44.25. The point of control overnight is higher than that. The market is in imbalance, and we're opening in a gap. Gap rules apply this morning. The gap this size is not likely to be filled, and so the question again on every gap is whether or not we get strong responsive buying. Remember, the inventory is 100% short on very high volume. The question is, does some of that come in and buy up in order to balance or take profits off the table before the market opens? So when we open this morning here in 15 minutes, the key thing I'm going to watch is how the buyers are able to lift prices. If they cannot lift prices well, then I'm going to look for areas to lean short, and I'm looking for the overnight low to be taken out, the 4,400 to be taken out, and the next area of interest is, coincidentally, 43.83. If you recall, it was 44.80 to 83 up here. Lots of symmetry in the market. That's the last support we expected yesterday. 43.83 becomes a downside target. Now, if we open and then we push lower, we open and we start to shift lower. So let me choose a different color here. Man, I don't like the way they change these programs. We open here and then we walk our way down, and I'm going to zoom into this to show you the collision structure in this area. They're really fighting ahead of this 4,400, and that could be delta hedges against the 4,400 strike. It could be hedging or locking in profits and so on. While you're short equities, you could be buying futures in the 4,400 area to hedge, and then you'll get rid of those futures as it breaks through, that sort of thing. But if it struggles to push through and it gets through the overnight low here, and then we have an impulse up, then we're looking for 44.25 to bring us back towards our day-generated prices, and then the overnight point of control. But I do not expect us back into settle. I'm expecting the 44.50 and 47 area to be strong resistance this morning. I'm not expecting them to get through that. So this is the important thing, right? So everybody wants certainty when they come to trade. The hardest part for people, to accept about the markets is that it's just a probability, that there is no certainty, and you can't buy your way or study your way or analyze your way into certainty. And so what we have to do then is create a price map, look at how things are set up. What is easier? Think of nature. Think of how water flows. The way water flows is it looks to find the path of least resistance, and the market does that. And then all of a sudden, when buyers step in, it's like taking a little stream of water and then putting a boulder there. All of a sudden, this water starts to pool. It might try to sneak around it, but if the boulder's big enough, and that's buyers in this case coming in on selling on a downflow, um, if the boulder's big enough, what happens is the water rises enough that the flow starts moving the other way, right? The water pools enough that it becomes a high point and water starts moving the other way. And collisions are the first thing that kind of indicate that this is happening. The market's job is to sell, to find buyers, to rally, to find sellers, because ultimately it wants buyers and sellers to find the equilibrium point or the balance point and to trade in that area. This is why we always track balance and imbalance, not just price action. Price action is just a vehicle the market uses to locate buyers and sellers to move price, but its purpose is to find balance. That's the goal, right? Efficient markets are balanced markets. So that's what we're looking for here this morning, okay? That's really it. Looking at crude, I wanted to look at crude for a minute. Here's the profile for yesterday. Pretty decent structure for a trend day down. We held the point of control at the upper end of the range, which is very interesting. We spent a lot of time up here, and so we have the point of control remaining at 4,500, right in line with these days here. So the 4,500 is the most attractive price in this area. And then we move price away. So this is not a P-shaped profile as much as it looks like a P. It balanced and then moved away. And the fact that the point of control remained at the upper end of the range does tell us that it was not able to get consensus from many sellers. So it's more of a panic selling or more of a let's get out of here selling environment versus a market that's shifted balance or acceptance on the way down. So very likely to snap back again. We are way down here. This is, there's a lot of work to be done before we get to that. But once we get into the range, we only see one set of singles yesterday, despite the sell-off. There's only one set of singles. That's pretty unusual for it to do that. So a normal sell-off, it looks more like this day here, where we have a couple of sets of singles, we have the point of control at the low end of the range, and we close at the low end of the range. We close at the low end of the range, but we didn't bring value down. So price action-wise, candlestick-wise, this looks horribly bearish, but value-wise, not so terribly much. So any snapback, any rally here is likely to target the 4,500. We'll talk about that at some point in the future, and I'll remind you that we covered it today. So here's the profile for yesterday. Let's take a look at the NQ real quick. NQ, same situation, same structure, same everything. We've been talking about this 350 to 380 area here, just acceptance. NQ finishing at the low yesterday as well. And when we scooch this up, we see that the NQ's got a huge gap underneath. It's not that big. It's less than 200 points. It is not likely to fill this gap. It may make an attempt, but it's not likely to fill that area. Okay. So 15,050, if you recall, from the September contract was a crucial area. It's now 15,200, or actually 15,250 up here, and so I'm looking for that to be resistance on a retest, but we have a lot of work to do. The NASDAQ is very likely to flow downwards from here more easily. So today is all about price action and watching order flow to see what kind of action we get. Crude ended up opening in a gap yesterday, poking into the range and closing right where it opened. So crude looked quite bearish yesterday. This morning we have a bit of an open drive, but I'm expecting crude to fail ahead of the 91. I'm expecting crude to turn over and tag settlement and start to push lower. Crude has clearly overextended. Unless news comes out, crude is expected to hold here and build balance right in here. So I'm expecting crude to kind of come back and just sit here for a while until we decide on the next move. I'm expecting the next move to be lower. We'll see how that goes. I'll leave you with that. Good luck today. Mind your risk. Don't overcommit to any single trade. It is not worth it. Date them, don't marry them type of thing. And make sure you're tracking your performance so that you know what the cost is of deviating from your plan. If you have any comments or if something I can do better for you to help you along, let me know. You can do so in the comments under the video. Good luck, and I'll catch you tomorrow. Take care.